Mr. Ruiz and Mr. Witzburgh are our speakers tonight. The topic, as everybody knows, is on forbearance. Mr. Ruiz is he's an attorney specializing in real estate, and Mr. Witzburgh is is it safe to say, Marty, a mortgage broker? Would that be
mortgage
fair?
banker?
Mortgage banker. Been in the business for how long, Marty?
Over 25 years.
Over 25. Okay. And Brian, how about you? How long have you been practicing and on the real estate side? You're muted right now, Brian.
I've been at my firm for 21 years, practicing law for about 5, real estate for about 4, as the primary part of the practice that I kind of carved out of the bigger practice that I work for.
And Brian, where is your office located? What part of New Jersey are you in?
We're in Edison, New Jersey, central New Jersey.
Okay. And how about you, Marty? Are you Edison as well, I think, right?
We have an office in Edison. We have one in Bridgewater. I work at it. We have one in Florham Park. So we have numerous offices. It's a very large company.
And your company, Marty, is called?
It's Caliber Home Loans.
Caliber Home Loans. And
one of
Brian,
the largest mortgage banking companies in the country.
Awesome. So that's a good connection to have, guys. Is Mr. Witzburgh? He's been doing it for a while. He's very knowledgeable, and that's why I'm so happy that he agreed to come on tonight to talk a little bit about forbearance. Brian, your firm's name in Edison?
Leitner, Tort, DeFazio, and Browse.
You're a little garbled there. Say that one more time.
I'm sorry. It's Leitner, Leitner, Tort, Tort, DeFazio, Defazio, and Browse, Brause.
Pretty good firm. Okay.
We've been around since the late 40s.
Okay.
As a whole.
Awesome. Okay. So we're forbearance. I'm sure everybody knows what forbearance is, but I guess a quick definition is a lender on a mortgage is sort of foregoing payments for a period of time. And then there are, and you can correct me if I'm wrong, Marty, because this is all new to me since this whole pandemic thing. Some lenders will require that forbearance to be paid as soon as the mortgage payments are reinstated or start again. Other lenders will put it to the back of the loan. So whatever your time frame is, your lapse of payments would go to the back end. Is that a pretty fair explanation, Marty?
Yeah, it seems, that what you're saying is that it's new is true. It's new for a lot of us because it's never really been done in such a large quantity. Normally, they're going to do a forbearance for 3 months or 6 months is the normal period. And there's normally a couple of different options. So let's just say that your payment's $2,500 and for 3 months, they go into forbearance. So you don't have to make your payments for 3 months. At the end of the 3 months, they're going to probably give you 3 options. One option is pay the $7,500 and start making your payments on time again. So they'll ask for a lump sum. Some of the lenders or the investors who's ever servicing a loan may say, okay, we're going to take that $7,500 and we're going to divide it over the next 12 months. So we're going to say, give us an extra $650 or whatever that number is over the next 12 months to make up for the time you lost. And then the third option is the one that you mentioned, is they're going to do a complete modification of the loan, tack it onto the back of the loan. In other words, extend it for an extra 6 months, or make it just payable when you pay off the loan. So if you're 30 years, when you get to the 30 years, you're going to owe an additional $7,500. So those are normally the 3 options that they give you, but each servicing company, whether it's Wells or Chase or B of A or Caliber, is going to have different time frames and different options. Some of them we're only doing it for 3 months. A lot of them are 6 months, like Quicken does 6 months if you want it.
And is that like a negotiable thing, or whatever is in place for that lending institution
It's negotiable. Normally what they'll say is, all right, we're going to give you forbearance. Do you want to do 3 months or do you want to do 6 months? Then as soon as you do that, when you get to the end, then they'll say, okay, you have, let's say you did 6 months. You're in the 5th month. They're going to start calling you and say, all right, what do you choose to do? Should we draw a modification, come to your house and have you sign it? Or are you going to pay it in the next 30 days?
Gotcha. Okay. Okay. From your experience, is there one option that's more popular, so to speak, than others?
It seems like most of the people, when they get to the end of the period, are in no position to make that payment. They went into forbearance because they have a financial situation which made it so they couldn't make their mortgage payment. Why they're going to get to the end of that and have 8 grand or 15 grand or whatever it is laying around that they're going to pay is probably not likely. So most people are going to do type of a modification. They'll send a title person to your house. You'll sign a new agreement and it'll lay out the terms that you guys agreed to.
With your position, Marty, with your company, are you seeing an abundance of forbearance?
There's a ton of forbearance.
Yeah.
Like, I mean, I think the shame of it is, what's really bad is that they never really explained it very well. So the government came out and said, hey, we got a pandemic. If you don't want to pay your mortgage, don't pay it. I mean, that's kind of what they said, not exactly like that, but it was very, they made it sound like it was not a big deal. And unfortunately, there are a lot of people that went into forbearance that were still working, still earning the same income, and didn't really need to go into forbearance. And what it did is it puts a lot of the investors in a really bad position. So a company that services loans, a big company like Caliber has a huge servicing portfolio. Wells has a huge servicing portfolio. So if, 10% or 20% of the people in their portfolio stop making payments, well, they have to still make payments. So the servicer on the loan still has to make payments to the final investors. And so they're kind of up the creek where they don't have the money coming in, and it's put a lot of lenders in a bad position. So we find that a lot of people are in forbearance, and I find from what I see, people come to me and I figure out that they didn't really need to be in it, but they thought it was okay because I don't think it was spelled out correctly.
Got you. What's your feeling? Have you ever seen this happen in your career before?
No, never. Nothing like this.
Wow.
I mean, I've seen people do modifications of loans.
Right.
And I never thought that those worked out very well. A lot of people do a modification on their loan. Then when they go to sell their house, they look at their statement and they think they owe a certain amount. And then they find out there's another 50,000 sitting behind it that they didn't realize because of the modification. So we really never had anything on this grand scale as far as forbearance, but the modifications have been around for a while.
Right. Right.
And the other thing is, neither of these things do hurt your credit. I mean, that's the good news. So if you go into forbearance for 6 months, you do a modification and you go out to get a credit card or a car loan, your credit score isn't affected. Your ability to get a new mortgage and the timing of that is definitely affected. And that's something everybody needs to be aware of.
Now, when you say that the ability to get a mortgage is affected, in what way? Like, is there some sort of a mark or some sort of a note on that individual's credit report saying that they're in a forbearance?
You can see it. You can tell by the way it's reported that it was in forbearance, because you could see the months where payment wasn't made, but yet the credit score, but it doesn't show as a late payment. So you already know that it was in forbearance.
Okay.
So Fannie Mae, Freddie Mac, FHA are all really kind of scrambling to figure out how they're going to handle this issue. And I've seen different lenders handling it different ways. So if you come to me and you want to refinance your house and you're in forbearance, I'm going to say, no, you can't refinance your house. You have to get out of forbearance and make 3 on-time payments before you can refinance your house. And so people come to me and they say, well, why is that? I'm in forbearance. Why can't I get a new mortgage? Kind of think of it from the lender's perspective is, you're in forbearance because you're telling us you can't afford the mortgage you have, but now you want to come to me and you want me to give you another one. So it really doesn't make sense. So in most cases, you have to get out of forbearance. You have to do 3 payments on time before you can get a new mortgage. I'm going to give you an exception, okay? So I had a guy come to me, and this is really a good example of why different investors have different guidelines on it. I had a guy come to me, referred by a realtor that I do business with, saying, this is my cousin, he's in trouble. He sold his house. He's purchasing a new house. He's been turned down by 2 lenders. Can you help him? It's an FHA, government guaranteed loan. So we looked at it, and what happened is he was in forbearance on the house he was selling. He was going through a nasty divorce. He had some issues financially. He went into forbearance and he sold the house. And then he purchased another one and wanted to close the very next day. And the lenders all said, no, you need 90 days. So when he came to us, we really spoke to FHA and looked at it real carefully. And the guideline is if you've paid off the mortgage that was in forbearance, the way we look at it, you can get another one. And FHA says the same thing. FHA allowed us to close that loan. So each circumstance is different.
All right, you probably know this question is coming. What do you feel with this whole forbearance thing? How is this going to affect the real estate industry as from an investor standpoint, and most importantly, from your standpoint as a mortgage banker?
You know, it's really a tough time to decide what's going on. You know, usually you have a real good feel for it. But at this point, to me, I think values are really inflated. And the reason that they're inflated is that there's no inventory in a lot of areas. So I can only speak from my market. So my market is Essex County, New Jersey, Union County, New Jersey, Bergen County, New Jersey. So a house goes on the market and 50 people want to buy it and 20 people want to put offers on it. And the house is listed for $350 and it goes for $390 because that's what's going on in the market today. So to me, that's an overinflated value. There was a reason it was on the market for $350. And the fact that it sold for $390 is just an indication of it's simple supply and demand. You got a lot of demand in New Jersey because a lot of people are trying to get out of the city because of the pandemic. They're coming to New Jersey and there's not a lot of inventory, so prices are high. To me, with the economy the way it is, there's so many people that are either out of work or going to be out of work because of shutting down, opening up, shutting down. You look at how many industries right now that people are unemployed, whether it's bars, restaurants, movie theaters, catering places, you know, the gyms. There's so many people right now that are affected by this that are either now in forbearance, and when that forbearance is over, they're screwed. Now what? You know, unemployment's going to run out. Is there going to be a new bill come around that's going to help? So I personally think that there's going to be a lot of foreclosures are going to hit the market in the next 12 months. And I think that's going to bring the market back down because I think there'll be a lot of distressed properties, which should help you. And I think the market will drop back down at some point in the next 12 to 24 months. That's my opinion. So
that means that you and Brian are going to be pretty darn busy.
You know, I will tell you, I am busier now than I have ever been. Between the lower interest rates and the huge amount of refinances that are out there, and the purchase business is just humming like crazy. We are very, very busy.
Do you feel, Marty, from this this November 3rd election that that'll affect anything from your experience in regards to interest rates and what you've just spoken about?
I don't think so. I think either administration we're going to have the same problems, you know, and whether they're going to get better in the short term, I don't think so. To me, it just seems like this thing's going to be around a while and the economy is going to have to adjust. But I don't think the election is really going to affect it. I think interest rates will stay low, and I think the real estate market will stay busy. I just think that it's got to come down. I just don't see it keep going up the way it is. What goes up must come down. I think it's going to come down.
Yeah, as an investor, I know we ride that roller coaster.
I guess you do.
I'm going to jump over to Brian for a minute here while we're on the topic of you were mentioning about a couple statements back of people that are going to be getting in trouble and stuff. Brian, what with this whole forbearance thing, tell us what you feel could have. Obviously, we can only guess or make predictions, but from your experience, what would you say based on what Marty's input was, where the market's going to go? Obviously here in New Jersey, right? Because that's where we're at.
Yeah, I mean, building on what Marty said, I have a ton of clients who come to me in the morning. They got an offer accepted. They want to be out of attorney review in an hour. Their agents have scared them into thinking they're going to lose the home if they don't. And, you know, come midday, I have 6 attorney review letters that I'm trying to, you know, work with. And everybody has appraisal issues because, like Marty said, people are offering $40,000 and $50,000 more than the property's worth. And they say, well, my realtor said I can just waive the appraisal contingency. And I said, well, no, you can't, because you have, first, you have a loan. So you really, truly can't unless you're sitting on enough cash to cover the deficiency when that under appraisal comes in. And now we're seeing, not to get totally off topic, but now we're seeing a lot of what I think may be overzealous appraisers who were doing a lot of desk appraisals for a long time during the height of the pandemic. Now they're out back in the field. We don't know for how long, and they're coming back with more under appraisals than I've seen, you know, since March for sure. I think I saw more in the last 2 months than I've seen in the last, you know, 6 months. But so then we have to, you know, deal with that and try to get people to understand that that's a real issue that you need to consider when you're going under contract, that I can't guarantee where this thing's going to land on the appraisal. But if you're telling me you're going to waive it completely, you need to have that cash to back it up, or you're going to find yourself in breach of contract. So I think that's one issue we have. I think, I mean, not to scare anybody, and maybe this is just me running with it a little much, but this might be the next, and I don't think it's going to be anywhere near 2008, but I think that it might be the next bubble to burst. I know, I don't want to even say the numbers, but I think that you have, just like Marty said, you have a lot of these forbearance that are going to, you know, could end up in short sales or foreclosures. And then, you know, investors are going to come in and they're already doing it now. Yeah, exactly. I mean, you guys are, I haven't done this much work, and I do a lot of work for investors, and I haven't done this much work for investors in a long, long time, if ever. A lot of my stuff is investor work because they can come in and say, all I'm going to do is a tank sweep, or maybe they're not even doing a tank sweep. They're waiving inspections. They're just coming in and plucking these properties out, and people are going to go with them because they're cash. They're, you know, waiving the appraisals. They don't have any contingencies. So if these things all come down to foreclosures, I think you're going to see a lot of happy investors, maybe, you know, a year and a half from now. So, or 2 years, but, you know, there's a lot of other factors that come into it. I think that I think maybe we've hit that height of how crazy it is fighting for the inventory. I mean, maybe it's starting to level off a little bit. I don't think it's going to it can't I don't think it can get much more crazy than it was, but maybe I'm wrong. Like Marty said, I'm also never been this much busy with buyers. My first, you know, I would say my first 2 years of practicing real estate law, I probably did a lot more sellers than buyers, just because the agents I worked for. But now a lot of my sellers agents are doing a ton of purchases instead of sales, because I mean, you have to obviously have one to have the other. But there's a lot of people, you know, rushing out to buy houses, and like, you know, like Marty said, they don't understand what forbearance is or what an appraisal really means, but they will rush through it to get to that closing table because the fear has been, you know, planted in them by their friends or by their agent or just by reading, you know, stuff online. And you try to counsel them the best way you can. But at the end of the day, it is a free market. You can do what you want within your means as long as your lender says okay. Going back to forbearance, I think one of the and going back to forbearance and how it ties into all these new home purchases, I think the lenders realize quickly this could be a problem for them. And Marty can speak to this too, but now they're they're having people sign these COVID addendums when they either at closing and at the time of the contract sign, but mostly at closing, saying that your employment is not in a field, or you don't expect your employment to be in a field that's going to be affected by COVID, because they don't want you to come to them, 3 weeks later and ask for forbearance after you just closed on the loan, or 3 months later or whatever. So I think that's, and there's much more language that goes into those addendums. But that's something that people kind of gloss over as well. They're just so excited to finally find this house that people told them they were never going to be able to find. So I hope that it somewhat stabilizes and then just gets better from there, builds up in a steadier manner than it is now, because we do have a lot of people. And the reason I said it, we have a lot of people that you don't know it until you get into a deal with them, but they really are half in and half out. And they come to you guns blazing, ready to go on these deals. And then it starts to sink in, and you start to realize that they only have, a couple of toes in the water. They're not all in. And as an attorney, then you have to, try to talk them off the ledge sometimes, or, I find myself either dragging people to the closing table sometimes, or, trying to, I have sellers that don't want to sell at the end of the day because they can't find another property, can't find a relocation property. So we're doing a lot of deals where relocation clauses are built into the attorney review, which are hard to do because you essentially have to set a date that the seller has to be under contract for their new home. And there's a tremendous fallout, and we don't know what the real fallout's going to be from these forbearances yet. And maybe it won't be as bad as we think it is, or it could be. But I think that there will be definitely somewhat of a fallout.
Are you finding that a lot of your buyers, Brian, are like Marty just mentioned, coming from New York and looking to buy here?
I've had more out of state.
What do you want, beans, or what do you want?
I do have a tremendous amount of clients coming in from New York, and they will start at the northern part of New Jersey and move down from there. As you know, a ton in Union County, Essex County, and I mean they are literally buying houses faster than they can record the deeds at the county clerk's offices. So they're all backed up, and there's a that's a domino effect. People can't get movers, which creates problems for closing dates. There's a lot of different considerations. There's a lot of moving companies that have popped up from it. But yeah, it's certainly, to answer your question, certainly I have a ton of buyers from New York, and a lot of them are very young professionals that in some cases have spent their last 10 years of their life saving up to buy in New York, and now they can't get out fast enough. And that's the truth. It's really it's something that I hadn't seen before. So
have you experienced Brian, anything related to the forbearance where a property owner is looking at possible foreclosure because of following the forbearance process, or not yet? It's too soon.
Not yet. No, not yet. It's too soon, I think. It's certainly coming. I do a lot of short sales. I haven't seen foreclosures that were directly tied, to my knowledge anyway, of forbearance. But by the time I get the foreclosure, it's already the bank's found a contract. I don't have the details of how it became foreclosed upon until I get the title binder in to make sure that it's clear title. But I have not come across any yet that were due to that. I do have some people that lost their job, or saw that their job was in jeopardy and kind of sold and made a transition to somewhere else, and you know, they got out early, but not directly from the forbearance yet. I do think it's coming, but not yet.
Jumping over to Marty. Marty, do you think that the lending institutions are going to be a little bit, this is probably a loaded question. Do you think they're going to be a little bit kinder or a little more lenient with people that are in forbearance because of the pandemic and everything that's going on? Or you think it's going to be business as usual and, hey, this is the time frame, you didn't meet it, and we're going to start the process?
You know, I think that they seem very friendly now. Yeah, hey, you can go into forbearance, we'll give you 6 months. But I think as soon as that's up, they'll be the same tough lenders that they always, you know, there's usually, it's black and white, it's never gray. You didn't make your payment, you're 90 days behind, we're starting a foreclosure proceeding. I don't think that, unless the government steps in and says differently, I think they're going to be as strict as ever, maybe even more strict, because of the situation that they're being put in, where they're making payments and not receiving money. They're going to be anxious to foreclose, get that property off their books. You know, after they've already gone 6 months without getting paid, which they're not used to, and now you go another 3 or 4 months. They're going to be a year before they can even start a foreclosure proceeding. They're going to be very anxious to get it off their books. That'd be my opinion.
I know the courts were backed up because of the pandemic too. A lot of the court systems were shut down and foreclosures were not really being processed. Has that picked up from what you know, Brian? Or, you know, is the foreclosure process up and running again with the court system?
So the way it is right now, we actually just received a new order in New Jersey today for courts, which I started reading the parts that apply to my practice mostly, but the foreclosure courts are still, you could file in certain instances, but you're essentially just filing to go on the waiting list. You're not going to have it heard. And in a lot of cases, you can't even file. You have to have certain circumstances or egregious circumstances, sometimes threats from the borrower and things like that. But in most cases, nobody's foreclosing on properties yet. That, you know, there are certain factors that go into play. It's similar a little bit somewhat to evictions, where you have to look at, you know, what is the family dynamic, or their children that live there and things like that, are they in school? But most of the time the bank will just initiate the foreclosure proceedings. They can kind of control the pace that it goes at from there. They can just, you know, initiate it so that they, you know, start to toll the statutory period. So when the time does come, if they decide to pull the trigger, they've already filed their paperwork. What that does is create legal fees for their attorneys that file these documents, these papers, and someone's got to pay those at the end. So when the foreclosures do, you know, effectuate, there's going to have, you know, that's going to be another thing that we're going to have to do, is get, you know, on top of the, you know, we're going to have to get the payoff from legal fees from the law firms. You know, I've encountered that, especially on short sales, because you have to, you know, weave that into the final HUD that gets approved. But yeah, I think that it's going to be a slow process. Once it does open, the floodgates are certainly not going to just open up. And I think the government-backed loans will probably be last to go even. So, but it also depends on a lot of stuff like demographics. Is the market where the property is located in moving or not? Things like that. But I don't even think we're there yet. I think they're going to have to get through evictions first. The eviction docket is tremendously backed up right now. And these landlords, and this is something that's probably important for your group. I know you have a lot of investors and landlords, and they have no recourse right now. Essentially, they're stuck in the mud, and, you know, they can, you know, try to get people to go right to ejection actions and bypass the other stuff. You see a lot of cash for keys deals right now. Landlords are just, you know, trying to buy out their tenants to get them out, because they know how long and expensive it's going to be, especially if you have someone who knows how to play the system. So sorry, I know I'm getting off a little off topic there, but something for you guys to watch out for sure. I'm sure you guys are cognizant of it because it really is going to be, it is now already a huge problem for landlords. I have a lot of unhappy landlords that continue to call me and say, there's got to be something I can do. And a lot of times there isn't, unless there's truly egregious circumstances where they send the sheriff out. But I think that's going to have to get dealt with first, get that stuff on track. But, foreclosure, the first part of it, a lot of it is paperwork. There's a huge paper trail to start. And I'm sure the lenders won't hold back. They'll start. And so they have the option, when they, like I said, when they're ready to pull the trigger, they've already done some of the legwork.
Well, I'm thinking that we've got a good handful of people here. I'm thinking that we're probably going to have some questions. Jesse, how did you want to handle it? Do you want to go into the breakout rooms, or do you want to just take the questions right here in this format?
I think we can just take them directly in the chat. If people want to type their questions in the chat, I can read them out.
Okay. All right. And if anybody's got any questions for Marty or Brian, feel free to type them into the chat, and Jesse will pose them to the prospective person, whoever the question is for. One of the things I wanted to mention while everybody is here, next month's topic is going to be on land trusts. Land trusts are very, very lucrative for the investor because of the ease of being able to put a property into a land trust, and then also the liability stability, so to speak. Being in New Jersey, we know how very high litigation. Brian, is that pretty correct? A lot of litigation in New Jersey.
Yeah, I'd say we're pretty litigious here. I don't know if I just made up that word or not, but yeah, it's there's a lot of they're very large court dockets here.
So our guest speaker next month is Jack Shea. Jack Shea's been doing land involved with land trusts. God, how long did he say? Just like 30 plus years.
Yeah.
He's originally from Illinois, Chicago specifically area, and he said that was the standard practice then, was to have a property in land trust versus a deed. In fact, when we conversed, Jesse, Jack, and I, he said that you couldn't even get a mortgage on a property unless it was in a land trust. So very, very interesting topic. And I hope I can get you guys to all come on. I think from an investor's opinion, I know for me, moving forward, it makes a lot of sense versus putting everything into an LLC. So Land Trust with Jack Shea next month. That's going to be on December 21st, third Monday of December. So who's got questions for Marty and Brian?
I've got a quick question, Mike. I know for public record information, I know that pre-foreclosure or somebody falling into foreclosure is something that we can look at those records because that's public information. But what does it look like from, and it might be different in different states, but what does that look like when a homeowner files for forbearance? Is that something that's readily available as an investor to identify early on in the stage for us to start, say, maybe marketing to these people knowing that they're in distress, or is that something that we wouldn't know until they did hit their foreclosure date that the bank is actually moving forward to try to close them out on their timeline, or is there a public record that's something that you could look at if somebody was in forbearance to potentially say start marketing to them early or reaching out to them?
It's like private, like a credit report. The only place that would show up would be on their credit. So without having a credit report, there's no, it is private information that wouldn't be public.
Okay, yeah, that makes sense.
Yeah, to my knowledge, there's no way to mine that type of information right now at all. Not until, like you said, until it hits the foreclosure point.
Awesome. Who else is, anybody else have a question for Marty or Brian? Anita, I know you have questions. Come on.
I got one.
Okay.
Is that interest accruing on the back of that loan throughout the entire time of that? Is the interest accruing for the entire term of that loan plus the additional chunk at the end that you're now responsible for, or however it's structured?
Yep.
Is it accrued at a different interest rate or the same interest rate?
No, it's accrued the same, but there's no free days. So yeah, you are accruing interest if you're not paying it.
Okay.
And again, they're going to either say, okay, this is what you owe us. Here's your lump sum payment, or here's, we're going to add it on. But yeah, it does accrue.
Okay. We got a question from Don. Said, I'm in forbearance. Since it was a HUD property, we qualified for 12-month forbearance. However, we got a letter from our lender that the forbearance will be due after the 9th month. If the forbearance cannot be paid, then to refinance would be on the table with all the additional interest going to the back of the loan. Is this the goal of lenders or just their propaganda?
Sounds to me like it's their propaganda.
Yeah.
Okay.
Yeah. So I don't know why it would be 12 months and then after 9 months they're saying that it's an issue. Why aren't they giving the full 12 months? Is it an FHA loan?
It's a HUD property.
So yeah, it's FHA.
Okay.
Do we know who the investor is, the servicer?
Maybe Don can unmute.
Yeah, let me just unmute Don here. Don, are you there?
Yes. Can you hear me?
Yep, we
I
can hear you.
Okay. Yeah, our servicer is SunTrust Bank at the moment.
SunTrust holds the loan?
Yes.
Now, are they saying after 9 months, they're going to modify the loan and put it on the back, or are they going to refinance the loan? It said both things.
Exactly. They've been saying both things all along. And so
So
that's
they're
why
gonna,
we find out what is the goal, what is their intent. Because we probably owe maybe 18,000 on the house. We've been in it 27 years. And so the market value is now about 250,000 for the house. So it'll be great business for them to foreclose on us. So is that what they're looking at? Or are they looking at, we're easy one to liquidate because we do have equity that once we get straightened back out, we're in good shape.
I mean, you have so much equity that foreclosure is not going to happen for them. They probably realize that. Modification makes sense. But if you're having trouble making the payments, I mean, there's a lot of different ways to pay that off. You might, if you don't have the income stream, you could do a reverse mortgage and then just pay off that loan and then not have any payments.
Yeah, we looked into that a few years ago, but we weren't old enough at the time.
See, that's a good option because they'll pay off the first mortgage. Then you don't make mortgage payments, and you've got so much equity. You could take an income flow of maybe $1,000 or a couple $1,000s a month, and eat into the equity, but keep the house and live more comfortably. I like the reverse mortgage based on what you said so far. Are you 62?
No, but my wife is, and the house is in her name.
Okay, she's old enough now.
Yeah, she's 65.
Listen, I like the reverse mortgage. People are afraid of it. I think it's a great product, especially for what you just described.
Well, when we talked to them last time, they were saying that they usually do it with houses that are already paid off. That if you still had an existing mortgage on it, they were looking more for 100% ownership.
Nah, that's not true at all. And the amount of equity you have, it's a slam dunk. And with her age, it's a piece of cake to get a reverse mortgage on that situation.
Okay, super.
Just
Marty,
gotta go to the right-
there's some lenders that are better than others for that particular product too. Though,
I
right?
would go right to the source of somebody that's all they do is reverse mortgages.
Okay.
If you shoot me an email, I'll send you the name of a company. I put my email up when we put up the chat. I'll send you the name of a company that's all they do is reverse mortgages, and that would be a really good option.
Right.
Yeah, I don't see your email. Oh, yes, I do. Okay, it's farther down. And
Yeah,
Marty put his phone number in there too.
Yeah.
Don't forget, Don, you can also save all the chats in there, okay?
Super. Yeah, I'm also looking into investing. I'm working with a mentor now. And so I'm trying to figure out how I can help other people that are in forbearance or are coming out. Are these properties that investors try to lease option? Is that kind of the goal for investors?
Just, can you repeat that question one more time? I'm sorry.
As an investor, how do you help people who are in forbearance? Is it by taking over the property and lease option it to somebody else?
There's a couple of different ways. Obviously, we have people in our network like Marty that we could refer you to help you. Or if you're looking to sell, then we could purchase the property from you. Or we can put you with a real estate agent if you're looking to leave too. If you're looking to stay in the property, then we would refer you to someone like Marty or Marty himself to help you get into a better situation.
Now I'm talking as an investor myself. How do I help other people?
How would you be able to help other people?
Yes.
If you were an investor to purchase someone else's home, is that what I don't understand the question.
Yeah, that's it. If I'm in the position to help somebody else by purchasing their home through a private lender or whatever.
Okay. So if you're looking to be a private lender, I'm sure there's plenty of investors here, myself included, or Jesse or Jeremy, that we can talk to you and share with you, different options of what we do with private lenders to work with them.
All right, super.
Yeah, and I mean, we offer a multitude of different ways to be able to do that. I'm a private lender myself, so I'd be more than happy to share some ideas with you if you're interested.
Sure.
All right.
How about I'm sorry, go ahead, Jesse.
I was just gonna see if anyone else had any more questions to throw them in the chat. Otherwise, we were probably ready to wrap it up.
Oh, I know there's got to be more questions, Anita. No, huh? Okay. All right.
You guys did a really great job covering the topic this week. A lot of really good input. Thank you, Marty and Brian. We really appreciate it.
Thank you for having us. Yeah, thank you for having us. Really appreciate it.
Thank you, guys. Thank you for your expertise and thank you for your knowledge. I think this is, as time goes on for us as investors, this topic is going to grow and grow and grow. I think there's going to be more and more that we're going to be hearing about forbearance and property availability. So thank you guys for being able to share your knowledge with everybody. And I can't wait to hear next week's topic as well.
Our pleasure. Thanks again, guys. Stay safe.
Yeah, again, everyone.
Thank you, everyone.
Hey, Don.
Have a good evening.
Don, are you still with us?
Yes, I'm still here.
Yeah, Don, if you want to reach out to me, I was just putting in my my cell phone number in the chat for you as well.
Okay.
Actually, I do have a question.
Uh-oh. Okay.
With COVID, right, and everything, and now, a vaccine will be available, but, distributing it is going to take quite a while. So it looks like, we're in this pandemic mode for quite a number of more months going forward.
Mm-hmm.
Will the banks, now that a lot of people who went into forbearance are now going to be coming out that 9 months, as you gentlemen spoke about, will the banks be forced or be willing to extend that, because this is not over, right? It's going to keep going for another couple of months? And what are your opinions on that?
I know that they're going to go beyond 6 months. I've already heard of cases going into 9. That's, the magic month was March when this all started. So we're at that 8 or 9 months now. So
exactly. So what's
yeah.
gonna, come January, February, after those 9 months are over, do you think that the banks will be willing to go further above that 9 months? Or, assuming that people are already at 6 and 9 months?
I think, and this is just opinion for whatever it's worth, and I wish Marty was still here. I can actually, I'll get a hold of Marty and I'll ask this for you, Anita, so you know. I think that, I don't think they want to foreclose, but in the same token, I don't think they want to have their money tied up. So I think that as long as the global thing is going on, I think that it's going to sort of follow that way. In fact, I know it is. Because I know I'm hearing of people that are already extended, into that 9-month frame now. So
right.
It's tough because everything's so brand new, as far as forbearance and like we were saying, and this pandemic. But my guess is that I think it's going to extend a little bit further. How long, I don't know, but I don't think it's going to go forever. Sooner or later they're going to have to
right.
stop.
Yeah.
But I think it's going to, I guess the short answer is, I think it's going to go beyond the 6 months. When Marty mentioned 3 months and then 6 months, I sort of heard what he said, but I already know people have been saying to me that they've extended into the 9-month frame. So we'll see. I mean, time will tell. I think the bigger banks, as you know,
Also,
being an investor, the bigger banks are going to be a little bit stricter, I think, than the smaller banks, only because they can, right? But
yeah.
The smaller banks, I think, will be a little bit more giving, from my experience with working with the smaller banks. So just a guess on my part. I don't know if anybody else thinks differently.
I was going to mention that we already got a letter from our lender because our house note includes our PI and TI. And so they're already paying our taxes and insurance, even though we haven't been making any payments.
Mm-hmm.
And not only that, we had private mortgage insurance, but since we weren't making a regular payment, they never did pay that. And that got canceled retro like 6 months ago now.
Yeah, see, so those extra things, depending on your escrow, how much money you have in escrow for taxes and insurance, those things I think will play into it. And I think that goes back to what I was saying. The bigger banks have a bigger surplus, to work with those things. The smaller banks, on the other side of the coin, when it comes to stuff like that, with escrow and having money in escrow, that could affect it as well. Awesome. I appreciate everybody that jumped on here tonight. Thank you so much for coming out to listen to this presentation. I thank all of you. I thank my partners. Thank you, Jeremy. Thank you, Jesse. As always, you guys are great. And I look forward to seeing everybody next month with our land trust presentation. We're going to start marketing and promoting that sooner this time. Right, Joyce? We're going to start putting that stuff out a little bit quicker for everybody. So you guys will have plenty of time to plan for it. But thank you so much for coming out. Did anybody real quick, because I know some of you guys jumped on afterwards, did anybody have a problem clicking on the link in the event on Facebook to get here? Rick is shaking his head yes. Okay. Yeah, we're gonna work on that. I apologize about that, Rick. Jay was gracious enough to let us know about that, and we'll make sure that doesn't happen again. My apologies for that.
No worries, all good.
Thank you.
Thank you, everybody.
Thank you, everybody. We will see you next month, December 21st, 8 p.m. Eastern, 5 p.m. Pacific. Thank you, guys. Be safe.
Thank you, everyone.
Thank you, everybody.
Bye.
Bye-bye.